Hello everybody, my name is Thor Young. I'm a moderator at Bear Bull Traders, and I would like to do a recap for you today. Today's recap is going to be on a trade I took on the SPY. In this trade, I want to talk a little bit about how I formed my bias to take this using Camarilla Pivot Points. This has been something I've been talking about in the chat room a lot lately. I have a lot of new pivot strategies that I've put together, and I've been sharing those with the BBT chat room. I wanted to give you a little bit of a breakdown today on what I was reading in the SPY to show why maybe some of you got trapped thinking maybe today was going to be a long day on the SPY, or because it was gapped up and looked very strong, where I may have been thinking quite the opposite. Before I get into the recap, if you have a moment, please go ahead and like the video. I'd really appreciate that. If you like this content and you want to see more, feel free to subscribe to the channel and ring that bell. That certainly helps us get the information out there. It also helps you get our information quickly when we post it. You know, the more interaction we can get out of those things, the more questions, comments, and stuff like that, the better this all kind of works out. So enough of that, on to the trade. So as you can see here on the SPY, this is my trades that I tried to take, and I'll go over those in a second. But first, the main thing I want to talk about is how you can use Camarilla Pivot Points, all right, to help you form a bias using what we expect, which would be an inside day or an outside day. Right now, when I refer to that, I'm basically looking at the Camarilla's ranges, and when I see Camarillas with really tight ranges, then what I'm expecting is for the stock to consolidate somewhere in or around the range and then break out at some point. You can see the SPY actually did that on the 27th here. It actually rallied in the pre-market and then spent the whole day just chopping here around R4, sold off, but finally broke out. You could see it never really came inside the range here. The following day after that, we have what's called an inside range versus an outside range. And this is where we have a wide cam structure. We call it an inside day because it's most likely because of the wide cams that you're going to stay inside of your daily range that day. Well, today I found something very unique with the SPY. The SPY here had already gapped in pre-market and was poised to open very strong, I think, with a lot of good news. But I noticed that we were rallying, and we were rallying on really low volume up into what this red line up here is actually all-time high. So pushing towards all-time high on low volume, and notice we have a breakout day here on the cam, so an outside day, but we're already really outside. So the thought that we're just going to have this massive breakout where we've already gapped out and just hugely, and we're just going to keep running through weekly highs, it's not where the smart money is going to be. Statistically, whenever you're trading or you're playing trades, it's statistically much better to trade from the top of a range back inside the range, right? Or from the bottom of the range out towards the top of the range. But you never really want to get caught trying to trade near the top of the range to go out. Because what generically happens is you're going to get stuck when it returns back to value. Now, value being VPOC here, notice how that's come into play over the past few days. And even today, we returned right back through value. So the question is, now that we're coming back to value, are we going to hold under it and reject and continue our move down, which is what I'm banking on because I've still got some shares in play. Right? Or are we going to come back here, set, and reject back up? And if we come back through 421 to test VWAP, I'll probably go all out on my position at that point, depending on how the VPA looks at the time. So, and that's the recap for today. As you can see here, I went short here at the open when we pushed up. We made a new low, so we stretched for the top. We stalled here, high volume in a very narrow area. Let me throw you into the 1 minute so you can kind of see what I'm talking about. I tried a pre-market trade here, which I stopped at break even because it just didn't quite have the juice, and I felt like we were going to squeeze. So I went ahead and got out. And then at the open, notice we get this really narrow candle on a lot of volume. For an open auction, if this thing's going to break, normally that would be where it would happen, right at the break. But having us sell high here with a lot of volume here, I went ahead and went short, just gave it all-time high. And it pushed forward a little bit and then stalled and broke down. Got great partials, about 2.5 R there. And then I was taking off small percentage. Big core drop was right here at 421. I dropped over half of my original position there, and then another core drop there, almost a quarter position here. These are mostly 10% partials here. So I am still holding about 10% left, and I'm just actually rolling this as a trail. I just want to see if SPY sells off all day, and if it does, I want to be a part of it. If I get a significant pullback, like I said, I'll go out. So I hope everybody enjoys this. I'm probably going to be doing a little bit more videos on Camarilla strategies and, traverses, failed breakouts, compressions, stuff like that. So if there's anything in particular you'd like to hear about this, go ahead and throw a comment in there, and I will try and get to you. I hope everyone had a great trading day as always. Keep it green.